Welcome back to Trading Hour on CNBC-TV18. Well, Devang Mehta, Head Equity Advisory at Centrum Wealth Management, joins us now to talk about how to approach the markets. Devang, welcome to the show. I wanted your thoughts on this whole IT debate. Do you think the worst is over for the IT stocks? Because we've seen some good buying in the month of January.
Good morning, Sonia. Thanks for having me on the show. I think, yes, the answer is an emphatic yes, because what we saw in the past couple of quarters is that so much of negativity and pessimism regarding Indian IT exports. And yes, most of it came out from the fear of whether the Western side, the Western world goes into recession or it's a long-drawn slowdown. I think the answers to this are mostly sought in the this quarter's commentary and numbers, which seem to be encouraging, at least for out of the top four, the three companies were quite encouraging, right from Infosys to TCS to even HCL Tech. They didn't sort of disappoint. But also the commentary seemed to be quite on a strong footing. And the sense one gets is that we are out of that attrition fears, which was sort of at its peak a couple of quarters back, plus lateral hiring, which was another issue, which was the industry was sort of going through. My sense is that a bit of here and there in next 1 or 2 quarters, the sector looks very, very ripe in terms of the valuation correction that has happened. We have seen stocks valuation correct from 30-35 to 18-20 and even some below that. So my sense it's a good sector. Somebody has a horizon for 1.5-2 years. Some of the large cap companies really look attractive in terms of not only valuation but even business prospects.
Morning, Devang. Just going by the banking earnings that we've seen so far, right? It's pretty good. Federal Bank or even HDFC Bank, Bank of Maharashtra. But the earnings reaction has been fairly muted. HDFC Bank, in fact, slipped post numbers. Federal Bank did see some buying. Do you get a sense that the good news is already priced into the banking stocks after the run-up that we've seen, and banks may just consolidate for the next couple of months?
Prima, I think the logic that one derives from this when we see earnings of good companies or earnings of banks rather, and that not reacting it to numbers very positively is that I think the leadership was taken by banking sector a little earlier than IT sector. If I compare both, probably IT was a little more undervalued. Having said that, banks don't look to be sort of overvalued at all. It has come out of a long period of hibernation, 2.5 years of underperformance for a lot of this large cap banks like HDFC per se. The sense one gets is that we are getting into an operating environment which is very robust for banks. We know the credit growth numbers around 17-18%, which was visible in 2004 to 8. We are seeing NIMs probably expanding for a lot of these banks. We are seeing deposit growth to be sort of again expanding, and a lot of capex as well as consumption, discretionary consumption, which will lead to all these banks showing good credit growth, SME, MSME demand also being strong. So my sense is that somebody who probably has missed the boat in terms of buying good banking shares, particularly good private banks, some of the NBFCs have also gone through a larger round of correction. I think this sector looks to be brilliantly placed for the next 2-3 years, where India is going to grow a lot faster than the other countries or its other peers.
Okay, got it. Devang, good morning. Thanks for joining us. Normally in the budget, we do get an infra push, a defense push. Do you think at a time like this, you would look at, say the cement names or, the pure play infra companies? Defense, of course, there's been no dearth of action for several months now. But are these themes that you think are good to, look at right now ahead of the budget?
Pavitra, I think that's a very good question. I think a lot of market participants always go into the budget saying that it comes out to be normally a non-event. But this time around, because this is a pre-election year, we know that the 2024 budget by this government will be more a vote on account, and then we go into the election mode. So I think if you just go back in past cycles, we have seen government expenditure rising. We have seen government capex also sort of will be expanded in this year. We are also seeing evidence of greenfield and brownfield projects set up by corporates. The capex is on the rise for sure. So both this together would encourage a lot of investors to look into this budget very carefully. Yes, I think there will be a good amount of spends on discretionary consumption to rise as such. Some tax cuts here or there, probably being even a little populist as well as a little more conservative in terms of not expanding fiscal deficit. But sectors which would tend to benefit, my sense is that discretionary consumption is one sector which will benefit. Second is on the infra push that we always talk about. A a lot of these capital good companies, ancillary, proxy power plays, all this would also be huge beneficiaries if there is an infra spend. And of course, building materials and cement also go hand in hand if there is a infra push as well as the housing push or real estate boom, which is sort of being expected. So I think a lot of sectors tend to benefit, but of course, as I said, it's a very speculative thing to go into the budget and say this will come and this will not come. But yes, one has a lot of expectations this time riding on the budget, plus the earnings season which is going on.
Okay. I wanted your thoughts on how to approach a stock like Reliance now, because, you know, that stock has done nothing in the last 1 year. In fact, I think it's because, you know, the lack of telecom tariff hikes as well as the weakness in global energy prices have pretty much kept a lid on the stock's gains for almost a year now. Do you see the tide turning anytime soon?
I think, Sonia, a very relevant question, because most of the companies, if you've seen, right from Reliance to Asian Paints to most of these companies, why I'm trying and naming some of those are because we just took out some analysis in that last 4 months. Nifty has actually done a move of 2%, which is led by a stock called Bank of Baroda, which is up by 48%. So it's been more a sector rotation rally in the last few months, if I can make that point. Sometimes metals, sometimes PSU banks, sometimes fertilizer companies. Most of these companies which are prime market leaders as such. So be it Reliance or be it certain banks or IT companies, they have not done anything spectacular. And I think there is a good probability that a company like Reliance, which benefits both from the older economy businesses as well as the newer economy businesses, right from Geo to retail, which has been doing fabulously well, plus the green hydrogen thing which we are discussing before the program. I think most of these businesses are slated to do very well. So I think if market has to sort of move up from here, which I expect in the next 1 quarter, if not in the next 2 quarters, I think there's a good probability that this market leaders or companies which are heavyweights like Reliance or banks or IT has to sort of lead the charge. So yes, Reliance at this point looks interesting and attractive.
You spoke about many corporates having announced their capex plans. Could you tell us where is it that on a consolidated basis, where is it that we've seen the thrust of the capex announcements? Specialty chemicals, for one, has seen a lot of capex announcements. But where else? Do you have some numbers on that?
So I think, yes, a very good question. So particularly RT Industries had done a capex of around, say, 6,000 crore, and that is the highest ever. The market cap of agrochemical, specialty chemical together, which was somewhere around, say, 1 lakh, 2 lakh crore just few years back, is now around 10 lakh crore. So most of these companies, though operating in different universe, have done a lot of capex. When you talk to capital goods companies, when you talk to a lot of infra companies, there is a lot of thrust which is happening not only on power transmission, on power leakages which are to be addressed, on sort of energy efficiency of EVs. There's also a lot of spend going on creating the EV infrastructure. So all these companies, as I said, these are some of the companies that are listed, some are in the unlisted universe, but you see India INC probably spending a lot more. Of course, the numbers are not as visible because they'll be across different sectors. I named a few, but most of these companies are getting into sort of capex mode. That is where I think government capex plus private capex both together can create the type of credit growth which we are talking about.
Okay, Devang, that was quite an exhaustive conversation on a lot of sectors and the market as well. Appreciate it. Thanks for joining in. Let's slip into a short break. We'll get you more on the markets and buzzing stocks on the other side. Stay with us.